You want to know if you're a good driver. But what's the best way to find out? Get a quote. That doesn't sound very reliable. How about we check your credit score? Nah, that's not it either. What if I say, I know how well you drive your car just by looking at your insurance? Surprised? Well, don't worry, your daddy is here. And in today's video of Finance Daddy, we will look into how can a person's driving skills be judged just by looking at his insurance premiums. Do you consider yourself a proficient driver? Or, to put it another way, do you believe you're better than the ordinary Joe? If you responded yes, you are not alone in your thinking. More than 70% of all drivers feel they are better than average. However, in reality, that is not a viable idea, which can only indicate one thing: people have a tendency to overestimate their talents, even though they may not be entirely competent. In fact, this type of arrogance has its own name. It's also known as overplacement, or the Dunning-Kruger effect. However, we may soon be able to settle this dispute in India. If you truly wanted to know who's a better driver, comparing insurance prices would give you a very solid answer. Wait, what? Yeah, the insurance regulator has been especially assertive in recent months, notably deciding to allow general insurance companies to manufacture and sell pay-how-you-drive products. That is, your premiums will be determined by your driving habits, including as speeding, cutting lanes, and rapidly accelerating and decelerating. Furthermore, if you demonstrate exceptional driving abilities, you may be asked to pay a reduced amount. This is obviously not for everyone. You'd need to get a pay-as-you-drive coverage. It also incorporates some telematics. For example, the insurance company may request that you install a small GPS-like gadget or sensor to monitor your driving habits. Then, they'll assess the danger you represent to yourself and others on the road. You pay a lesser premium if you offer a lower risk than the typical driver, and vice versa. Insurance firms may even monitor your driving habits and make useful tips on how to improve. However, the advances do not end there. Remember how several insurance companies returned a percentage of their premiums during the 2020 shutdown. Since people weren't commuting as much, there appears to be an attempt to institutionalize this notion as well by selling pay-as-you-go vehicle insurance coverage. All you have to do is indicate the number of kilometers you expect to drive in a year and pay the premium based on use. According to some statistics, if you don't drive your car too often, you might save up to 20% on your insurance. And other insurance companies, such as HDFC Ergo, have already tested it with Maruti Suzuki dealerships. This is a far cry from how auto and motorcycle insurance coverage are priced. Insurance firms typically price policies based on IDV, or insured declared value. In layman's terms, IDV is the maximum amount of money that the insurance will pay in the event of theft or loss. You'd have to pay a larger premium if the IDV was higher. However, driving habits and overall distance traveled are not taken into consideration in this method. So, in some senses, it's not a fair program. In this case, safe drivers wind up supporting the riskier folks. They pay a higher premium, despite the fact that they do not file the majority of claims. However, if pay-as-you-go and pay-as-you-drive plans become more common, insurance may become a more equitable business. But why are these breakthroughs now appearing? Is it because auto insurance coverage are now required? No, not exactly. It's simply required to carry third-party liability insurance, which means that if you get into an accident by ramming another vehicle, the insurance will pay for the harm caused to others. However, if you wreck your own automobile by striking a tree, you will need to include own damage coverage, which isn't precisely required. As a result, many individuals skip this section entirely. But why on earth would anyone put oneself in that situation? According to certain research, overconfidence might be one of the causes. People feel they are better drivers than they are, and that they will never get into trouble. As a result, they merely get third-party liability insurance and ignore anything else. That is not the case, despite the fact that it is required. Not everyone has third-party liability insurance. According to the Insurance Information Bureau, the number of uninsured automobiles on the road has increased from 54% in FY18 to 57% in FY19. But we're digressing. The argument is that the new plans may encourage more individuals to get own damage coverage since their premiums may eventually fall. While this will not solve all of our insurance problems, it may make the roads a little safer in general. especially if the premium cuts are large. I hope you liked the video. If you do, please don't forget to like, share, and subscribe so that I get the motivation to bring more videos like these that are not discussed in our everyday lives. Have a financial full day ahead.